Well, there's been a lot said about Disney's attendance and how much money they're making from the parks. As many people have been saying that, Disney's playing a short-term game, which I do agree with. I think a lot of the things they've been doing have been short-sighted to basically make money now at the potential sacrifice of long-term profits and people visiting the parks more. But obviously, this is the debate people have. A lot of people are pro or against Disney, which way ever you look at it. It's an interesting conversation, and we're just talking about theme parks, so I think it's fun to talk about it all around. But we have an article from Forbes that is kind of painting a different picture than what a lot of people have been saying, which is Disney's theme park division reports its lowest profit in 2 years. This would be a very interesting article to read through a bit on some tidbits and give some thoughts on, because I find this very interesting to discuss. So that's what we're going to do today. So hi, I'm Jared with Capture the Magic, and we're just going to get right into this. So earlier this month, Disney announced sparkling results for its latest quarter, buoyed by the box office success of Inside Out 2 and Deadpool and Wolverine. However, buried right at the very bottom of the list of key points on its earnings report was the revelation that a dark cloud is hanging over its theme park division. Disney's theme parks, cruise lines, and consumer products are grouped under its experiences segment, and over the 3 months to September 28, 2024, it generated $1.7 billion of operating income on $8.2 billion of revenue. Its operating income was down 5.7% on the same period the previous year and was also the division's lowest quarterly result of the past 2 years. It was a different story when the world emerged from the pandemic. When lockdown ended, consumers had tremendous pent-up demand to travel and were flush with furlough cash so they could pay a premium in order to visit theme parks. Disney took advantage of this and increased ticket prices whilst scrapping previously free frills at its flagship Walt Disney World theme park in Orlando, Florida. Free buses from the airport to its on-site hotels came to an end, along with contactless room keys, and came in the form of wristbands. However, perhaps the most transformative change across all of Disney's theme parks has been scrapping the queue-cutting passes that were previously a complimentary privilege with each entrance ticket. They now come at a cost, and according to a recent data hack reported by the Wall Street Journal, they generated more than $724 million in pre-tax revenue between October 2021 and June 2024 at Walt Disney World alone. Now, we've talked about this number before, but that is a lot. I mean, you can guess by this point now, they're probably close to $1 billion in revenue off of charging for what was Genie Plus, now Lightning Lanes. That's that's a lot of money. And I think that obviously I'm one of those people that would love to see Disney bring back the fast passes, how they were included with your tickets, as that's something that people did enjoy, I think, on many levels. But I don't think we're ever going to see that unless Disney becomes very desperate, because again, if you can report that much money off of one revenue stream, in terms of business and how it reports to, the investors and people like that, that is something that they love to see. Now, I will continue reading, but I do have thoughts about a lot of those people probably aren't buying as much merchandise and food options as they probably would, but and also how they feel about their trip, if they feel, good and want to come back after that. But that's probably a separate conversation on some level. But just looking at the numbers here, if you're an investor that doesn't really understand theme parks, you would look at that and say, it's very impressive, and it is on some level, but it doesn't really go into, the theme park people. How do they feel about this? Do people want to come back? All that stuff that goes into it, just purely financial, that's something that they can really hang their hat on. The price rises combined with the cost cuts was a magic formula for Disney as they increased both revenue and profit. In turn, Disney's Experiences division accounted for just over a third of its $88.9 billion revenue and more than two-thirds of its $12.9 billion in operating income in the year to September 30th, 2023. So then the clouds began to gather. Disney declined to comment for this report, and it didn't need to, as its filings do the talking. The first indication that a dark spell has been cast on Disney's Experiences segment came during its second quarter 2024 earnings call in May. Its chief financial officer, Hugh Johnston, warned of a softening in theme park attendance due to, quote, a global moderation from peak post-COVID travel. In short, the furlough money has been spent, and the travelers who wanted to visit theme parks have now done so. That's just the start of the cost of the tickets has become so high that it is putting off new visitors. Also, this is during a period of time where obviously you have record inflation in many places. People are much more watching what they spend. And, we talk about that furlough money. A lot of people did have discretionary income at that time to spend, to go places. They were also cooped up many places depending on where you lived, and they wanted to go somewhere, have some fun, especially, and there is something too about people coming out of the pandemic where, they maybe looked at life a bit different. Let's have more fun. Let's have more experiences. You had a lot of people that were just wanting to enjoy themselves after going through the whole COVID thing. And, now that, whatever you want to call that, the high of that or the emotion of that wears off, people start looking at more at the financial side of things. And it just doesn't make any sense, or it doesn't make sense for them to go visit a theme park, even if they wanted to go, because of how expensive it's gotten. Because not only is it the ticket pack, the ticket prices have gone up and they're going to continue to go up. But if you look at also how Fast Pass used to be included, that was your ticket price to get Fast Passes and all the other things with it. Now the ticket price is also just basically your entrance in the park. If you want to essentially do the Fast Pass system, which is now Lightning Lane, that's going to be an extra many times up to $40 per person to do that. So you can see how quickly that would add up on a vacation, and not to mention hotels and things. So these are things that, a lot of people are just being priced out off of going to Disney for that reason. A report by CNBC in September revealed that, according to Wolf Research, the price of a one-day ticket to Walt Disney World has risen by 56% to $154 over the past decade, outpacing the U.S. national inflation rate by 24 percentage points. It didn't stop there. Also in 2025, Magic Kingdom is going to be $199 on a very busy day there. So they're very soon going to break over $200 per ticket, is another thing that look, as of now, it looks like that's going to continue to climb in price. The following month, Disney announced that it's introducing higher tiers of queue cutting passes, with the most expensive prices for those so-called Lightning Lane Premier Passes rising up to an extraordinary $478.19 after tax per person.
It's a bold strategy, Cotton. Let's see if it pays off for them.
Around the same time, Disney World's annual passes rose by as much as $100 to a little bit over $1,500. It was a similar story at Disneyland in California, where most daily ticket prices increased by about 6%, while their top-tier Magic Key Pass rose by a whopping 20%. It, too, far outstripped the rate of inflation and reportedly pushed Disneyland tickets over the $200 mark for the first time. It caused industry experts to question the wisdom of this strategy. It says, quote, "This price increase couldn't have come at a worse time when people feel pressured and Disneyland is an option, not a need," said Jim Schul, a former Disney theme park designer, Imagineer, who is one of the world's leading lights in his field. I completely agree. I think the timing of the price increases is very questionable during, if they're already admitting that, a lot of the consumers are feeling penny pinched and they're watching what they spend. They continue to raise prices. And not to mention, you have Epic Universe opening from Universal, their biggest competitor, next year. And it is, at this point, still a lower price option than the current Disney prices. So as those continue to increase for Disney, a lot of people are looking at just not only a place they want to go and experience, but they look at the cost of it. I think the timing of it is not the best, for sure. His view was reflected in the results of a 2023 survey by price comparison website LendingTree, which found that 60% of people who have never been to a Disney park said that the cost was the main reason. Worryingly, the survey also concluded that the average amount of debt that Americans get to visit Disney parks comes to a little bit under $1,700, and 41% of them regretted taking it out. We had a video, you can go back and watch if you like, talking about that survey as well. And that, that's gone up in the amount of people that are basically going to debt to go on a Disney trip. Prices of food favorites at Disney World have risen even more than the tickets, according to a recent report by financial advice website Finance Buzz, which found that they have gone up by 61% on average the past decade. And it's far outpaced the rate of inflation. So the food prices are, if the ticket prices, have gone up, and that percentage is like, oh man, the food prices are even more. It has led to furious fans slamming Disney on social media. In March, longtime Disney fan Jake Williams and his partner did just that when they explained that Disney World charges them $886 for one day at Magic Kingdom, as well as a night at the mid-tier Port Orleans Hotel and meals in average restaurants. That given these high prices, it is little wonder, Johnson said in May, that, quote, "Relative to the post-COVID highs, things are tending to normalize." After crunching the numbers, Brandon Nispel of KeyBank Capital Markets added that Disney's domestic park business, quote, "will be pressured for the rest of 2024, and it was no exaggeration." I think you could continue that on to 2025, 2026, and beyond. I would say for the least the next 5 years or so, when you're talking about Epic Universe's impact on things, and Disney, the things that they're currently building, in my opinion, again, are not going to be done and finished before probably 2028 is my guess on the first thing we would see. Not so long ago, Disney's executives liked to boast that its experiences division had delivered record profits and revenue for multiple quarters, but now those days are gone. Further indication that the fairy tale was over came in August when Disney reported that higher guest spending at Disney's domestic parks and cruise lines, as well as increased spending per room, drove up experiences revenue by 2.3% to $8.4 billion. However, it was the lowest tally of the year so far and was a steep decline on the $9.1 billion of revenue that the division generated in the first quarter. Worse still, the operating profit of Disney's Experiences division declined by 3.3% to $2.2 billion in the third quarter compared to the same period last year. It was driven by costs climbing at Disney's domestic parks as well as a lack of attendance growth, and this wasn't a flash in the pan. During the results announcement, Johnson gave insight into the reasons for the decline at Disney's domestic parks as he explained that, quote, the lower income consumer is feeling a little bit of stress. The high income consumer is traveling internationally a bit more. I think you're just going to see more of a continuation of those trends in terms of the top line, he added. Quote, we saw attendance flat in the quarter with a, quote, flattish revenue number, forecast for the fourth quarter, and a slowdown expected for a few quarters. I mean, I don't know about you, but that is not a ideal scenario there. If you're pricing out the people that, you know, the lower income people, middle class essentially, and the ones that Disney's been chasing after, which are these, you know, the very rich people, the high income people, which is one reason why they had the Premier Pass introduced, and those people are traveling other places, they're doing other things. It's not a great place to be. That leaves you with, again, a shrinking amount of people coming to the parks. And if you look at the attendance numbers, it never, Disney's never recovered those attendance numbers they had in 2019 before the pandemic hit. And Disney, during that time period, has made up for that loss of revenue in many ways with charging for things they didn't used to charge for and taking away things like Magical Express that were costing them money. I've kind of felt all along that is a very short-term way to look at things, because long-term, how does that play out? Do people want to come back? Again, vacations are very, they're emotions. They're based on how you feel a lot of times. And if people feel nickeled and dimed, they don't feel like it was worth it, do those people come back? And Disney World was built on repeat visitors, families coming once every year or a couple of times per year, things like that. And if they're not doing that as much, how does that affect them down the road? And I think we've yet to really see the ramifications of that completely, but I think this could be where it starts. And I've always said, if and when Disney starts seeing a downturn, it's not going to be overnight where they just drop off sales by, 80%. It would just be the slow decline, as a lot of people don't take repeat trips, which is, again, a large segment of Disney's business in terms of the theme parks. Echoing this, Disney's third quarter earnings statement added that, quote, the demand moderation we saw in our domestic business in quarter three could impact the next few quarters. While we are actively monitoring attendance and guest spending and aggressively managing our cost base, we expect quarter four experiences segment operating income to decline by mid-single digits versus the prior year. It was bang on the money as the fourth quarter operating income of its experiences division declined 5.7%. However, digging deeper into the reason for this revealed an even more concerning development. Against the odds, revenue from Disney's domestic parks rose a few percentage points in the fourth quarter compared to the previous year, but this was more than offset by the 5% drop from its international parks. The softening of demand that Disney warned of back in May was to blame, as its earnings report for the fourth quarter explained that its international parks experienced, quote, lower volumes attributable to declines in attendance. These drops in attendance contributed to a staggering 32% drop in operating income from Disney's international parks in the fourth quarter compared to the previous year. The earnings report explained that this was because of an increase in costs primarily due to new guest offerings and higher depreciation, as well as lower theme park per capita guest spending. Given the increase in ticket prices, it's perhaps no surprise that guests have got less money to spend in the parks, and this isn't just a problem for Disney's international outposts. As shown in the graph below, the operating income of Disney's domestic parks fell by a massive 59.2% to $847 million between the first and fourth quarters of this year. And this chart here in the green is domestic experiences, in the light green are international experiences, and the blue is consumer products. And, you can see here, but, looking at the domestic side, it has been going down undoubtedly. They had a little bit of bump quarter one of 24, but it has been declining since then. And, I think it's, again, they talked about they're basically just charging more for less people coming into the parks is kind of how they're trying to make up the difference, which, again, is why I think they introduced Premier Pass was, again, trying to have something that would bump up that, revenue line when it comes to financial reports. Although their revenue didn't drop by as much, it still fell 12.3% to $5.5 billion. It could take some time for the magic to come back. During the fourth quarter earnings call earlier this month, Johnson explained that the operating income for the first quarter of 2025 will be negatively impacted by the 2 hurricanes which recently hit Florida, as well as approximately $90 million of pre-launch costs for its new cruise liner, the Disney Treasure, which is christened in New York last week. Accordingly, Johnston said that quarter 1 will be negative. As we move through the course of the year, we'll move to positive quarter 2 and then see further strengthening over the course of the year. Now, it's hard to know when he's talking about that. I don't think he's necessarily talking about just the theme parks because, again, you got to think this also includes the cruise lines, which I'm going to do another video on this, but Disney is really going in heavy with cruise lines because a lot of people are choosing to do cruises over going to theme parks, and Disney is trying to capitalize on that, and their cruise lines have been doing fairly well. So it'll be interesting to see what revenue comes from where, especially once you get further into 2025 when Epic Universe is open. And, they could see a decline in the parks, but an increase in the cruise lines to try and offset that difference there. But it's really hard to know exactly what he's talking about in which division necessarily now that they combine those, those two things in one thing. The new ship is expected to play a role in this growth, and Johnson said that Disney, quote, expect the consumer to gradually strengthen through the course of the year. We also know that bookings that we have in the back half of the year are positive right now. As a result of this, Disney forecasts, quote, operating income growth for the experiences segment to be in the 6 to 8% growth range compared to fiscal 2024. However, it cautioned that this growth is weighted to the second half of the year and added that, quote, high single-digit percentage segment operating income growth is predicted for 2026. Time will tell whether the macroeconomic situation will enable such distant forecasts to stay on track or whether the dark spell on Disney's parks will linger even longer. So, again, it's one of those things where you look at it and it goes in line with what I've always figured. If, Disney continued to raise prices, what might happen, which would be, nothing like drastically falling off a cliff in terms of the domestic parks, but you just start seeing this gradual, decline. And, in a period of time where if they were the only player in town, maybe this wouldn't look as bad, but now they do have increased competition from Universal, and they didn't mention that in this article, but that is undoubtedly going to play into 2025. Now, I know Disney is saying that they expect to see an increase from Epic Universe. I'm not as convinced that they will, considering Epic Universe is going after people staying there longer. As, typically Universal has gone from when it originally was around for maybe a 1-day thing and, being a 2-day add-on to a Disney World vacation to now, trying to establish themselves as a complete vacation destination where people can come stay for an entire week or 4 days, somewhere around that range. And if that does happen, it doesn't mean that those people may still not go to Disney, but they may not go to Disney as much. So if they flip that, go to Universal for 3 to 4 days, they go to Disney for 1 to 2 days, that is going to be felt by Disney in many ways, and especially with a brand new theme park opening, all the hype around it, and Disney not really having anything to counter it. They do have shows and parades, and I do think for some people that will be something that they enjoy, and I think, nighttime parade is something people have wanted for a very long time from Disney, but it'll, obviously we'll wait and see how that ends up playing out, but Disney projecting that they're going to see this increase, I personally think it's wishful thinking. I don't really know. I don't think anybody knows. I'm not saying I know. I'm just talking about how I feel it may go. Because again, we've never seen a brand new theme park on this level, Epic Universe, open in over 20 years. So nobody really knows the impact that it is going to have and how that's going to be, affect Disney, because Universal has never been as strong or the size they are now. And Disney has never had to face this much competition, and the management there has never been in this spot before. So there's a lot of unknowns here. So anybody telling you for sure they know exactly what's going to happen, obviously I don't think they do. I think they're just guessing, and sometimes obviously there's biases involved here. Personally speaking, I think if Disney were to maintain their attendance levels, that would be a win for them, considering how much Universal is, projected to gain in attendance from Epic Universe opening. So there's been, analysts have said Universal's looking to potentially get 8 million plus new visitors to their theme parks, and Disney could potentially lose a million or so visitors that otherwise, maybe would have gone to Disney. That's, again, it's an estimate. A lot of it's based off of when the Wizarding World's open for Universal, but those were singular lands, not a brand new theme park. So again, you don't have an apples to apples comparison. Everything's kind of trying to see, past trends from certain things, but obviously it's a different economic environment right now. And if the economy opens up further into 2025, obviously that's going to benefit both Universal and Disney. So there are things that are outside of, Disney and Universal's control that could affect how people visit theme parks. Obviously, if there's people are being tighter with their money, they're going to choose more, they're going to be more frugal about it. And I think that helps Universal if that's the case, because I think like their tickets are going to be cheaper. They have a brand new theme park and a lot of people are waiting for it. I think if that's the case, Universal is going to benefit more than Disney. But I think if the economy opens up, people have more discretionary income, this is a situation where it could help Disney because people go, yeah, let's go to Universal and Disney or whatever that case may be, or could be vice versa. I do think some of it is going to be outside their control, but I do think projecting into 2026, even projecting into 2025, they don't know what this environment's going to look like. Obviously, I'm sure they have some indicators they can look at past performance, but I don't think they or Universal or anybody really knows the full impact of this. We just did another video the other day talking about a UK ticket provider, the largest one in the United Kingdom, has seen a 170% increase in Universal Studios ticket sales since Epic Universe, ticket sales went live. I don't know what to do with that number. All I know is that does show you a lot of pent-up demand and people wanting to go to this new theme park. I don't know how that translates to the domestic side of things, but obviously you have a lot of people that are excited for it. And the big question in 2025 is going to be not only how does Epic Universe perform and is it live up to the hype and all the things like that, but does that then transition over to Disney and people go over there as well? I think that's the lingering question. And of course, Disney is thinking or hoping that they're going to see a spillover from Universal and Epic Universe over into their parks. But again, people view Disney a bit different. They've done a lot of brand damage. That parks are way more expensive, like they talk about in this article here. So a lot of things are much different for Disney than they were even 5-6 years ago versus how they are for Universal. And you kind of see the differences in the way that they've been operating. I think it's logical to question it and just to see how this is going to go. And obviously, if it goes Disney's way, they're able to coast by the next few years while their stuff gets built and it comes online. And obviously, they would hope to see an increase in their attendance once those new lands are open that they announced. That's their, I think that's what they're hoping or counting on. But if that doesn't happen, what is Disney left to do? What changes do they make? Like, you could see a scenario where Disney is forced to, do some drastic things to try and increase their attendance and their revenue. And what they would do, I don't know. We've seen in the past Disney introduce free dining plans. We've seen them obviously do, when Hogsmeade and Diagon Alley opened up, they ran a lot of, really good discount tickets, trying to get people to go for multiple days. So obviously, I think we'll see that undoubtedly with ticket sales and offering discounts on that level. But, they could be forced to do some pretty drastic discounts, even with increased ticket prices, which seems strange. But, we could see that. But obviously, it's not all sunshines and rainbows. When you look at the Disney, financial report here, they obviously were touting the increase in the domestic side of things. But, looking deeper into the numbers, as many times is the case when you're talking about financial reports, which is pretty boring. But a lot of times you can kind of find more trends there. But until then, we can just basically take a guess and see what we think and discuss it. So and I think that's pretty fun to do. But either way, that's going to be it, though, for this video. If you like this video, please like it and subscribe to the channel, as we do lots of coverage here of Universal Studios, Epic Universe, Disney World, and pop culture. And let us know in the comments, what do you think about this article, and how do you think Disney is shaping up in 2025 with Epic Universe on the horizon? And until next time, we will see you in the parks.